ARM's $54 billion IPO, a deep dive into the chip design giant. In a significant financial move, ARM, the chip design firm, recently concluded its initial public offering, IPO, raising eyebrows with its valuation exceeding $54 billion. This groundbreaking IPO saw ARM selling more than 95.5 million shares at a price of $51 per share, which was at the top end of its earlier guidance. As the tech world eagerly awaits ARM's public trading debut on the Nasdaq, let's delve into the details of this milestone event and explore the intricacies surrounding it. Evaluation at a glance. The IPO has propelled ARM into a league of its own, with a valuation that stands at a staggering 20 times its annual sales. This valuation reflects a remarkable achievement for the Britain-born, Japan-owned chip design giant, even as its revenues showed a marginal 1% decrease to $2.6 billion for the year ending March 2023. Net income also saw a 5% decline, settling at $524 million for the same period. ARM's key market and geopolitical risks. One intriguing aspect of ARM's business is its significant reliance on an independent entity known as ARM China. Alarmingly, this entity has grappled with governance issues, making it the company's largest customer. This situation poses a unique challenge, especially during times of heightened geopolitical tensions. Despite these challenges, ARM remains optimistic about its market potential, estimating a total addressable market of a colossal $202.5 billion. The company's dominance is evident, with more than 30 billion ARM-based chips shipped in the fiscal year ending March 31, 2023. Additionally, ARM has been steadily expanding its market share in the cloud computing silicon market, growing from 7.2% as of December 2020 to an impressive 10.1% by December 31, 2022. This growth trajectory aligns with projections indicating that the cloud computing chip market could be worth a staggering $28.4 billion by 2025. Tailwinds and challenges. ARM's growth is buoyed by several favorable trends in the tech industry. One notable factor is the rising demand for sophisticated chip design, coupled with a shift among original equipment manufacturers, OEMs, toward in-house chip design to enhance performance and efficiency. A prime example of this trend is Amazon Web Services, AWS, and its evolving family of Graviton cloud compute instances. However, some industry experts express caution, pointing to SoftBank's majority ownership of ARM as a potential concern for investors. Questions regarding corporate governance under SoftBank's ownership have led some to approach the IPO with caution. Competition and risks. ARM acknowledges the presence of formidable competition, particularly from established technologies like the x86 architecture and the growing prominence of free, open-source technologies, notably the RISC-V architecture. Many customers, including major players, have shown support for RISC-V and its related technologies, which could pose a threat to ARM's market dominance. The prospectus highlights that these alternative architectures may have different business models that could be more attractive to customers. Furthermore, ARM has noted the emergence of a joint venture in August 2023, aimed at accelerating the adoption of RISC-V, backed by industry giants such as Qualcomm, NXP, and Bosch. This venture underscores the growing momentum behind RISC-V. European industry and policymakers have also demonstrated their commitment to technological sovereignty through initiatives like RISER, which aims to develop an all-European RISC-V cloud server infrastructure. The road ahead. While ARM remains the dominant player in CPU and instruction set architecture (ISA) history, the risks it faces are undeniable, and its valuation appears ambitious. Bloomberg reports that the IPO was oversubscribed by a factor of 10, leaving prospective investors pondering the potential gains or losses. As ARM prepares to make its debut on the Nasdaq, the tech industry watches with bated breath to see how this historic IPO will shape the future of chip design and innovation. Only time will reveal whether investors' cautious optimism or concerns about the company's future were well-founded.